June 30th, 2026. Buckle up, because Wall Street finally swung its circle, and strategy actually started selling Bitcoin. Real quick, today's sponsor is Compete Token, the gaming crypto that actually has real games behind it. Link in the description, go check it out. Wall Street just ganged up on Circle. 140 companies, Visa, MasterCard, Coinbase, BlackRock, BNY, Google, Stripe, even Ripple, all teamed up and launched a rival stablecoin called OpenUSD, free unlimited mint and redeem, and partners share the reserve earnings. That last part is the knife, and Circle felt it. Circle stock cratered about 16% to roughly $63, down 39% in a month. The stablecoin market is around $307 billion today, and BNY thinks it hits $1.5 trillion by 2030. Translation: every legacy giant just decided they want the float, and Circle is the appetizer. Saylor is finally selling Bitcoin. Strategy rolled out something called the Digital Credit Capital Framework, a $1.25 billion Bitcoin sale program, $2 billion in stock buybacks, and a fat dividend hike to 12% on the preferred. The infinite money glitch officially has a stop button. They still hold 847,000 Bitcoin and $2.5 billion in cash, so they're not panicking. But TD Cowen took one look at the whole picture and slashed its price target from $400 to $260. When even your biggest fans cut you 35%, that's the market saying, okay, the magic trick is over. Bitcoin just tagged a 2-year low. Price slumped to around 58,000 as the dollar ripped to a 40-year high against the Japanese yen. King dollar is back, and risk assets are getting served the bill. Q2 was rough. Bitcoin down about 20% while the S&P ran 14 and the Nasdaq surged 25. So yeah, the AI stocks ate our lunch this quarter. Congrats, Nvidia. Long-term holders from the 2025 top are capitulating, which historically is exactly when the smart money starts buying. Not financial advice, just pattern recognition. MetaMask just became a bank. The new money account runs on Monad, pays up to 4% on a stablecoin called MUSD, and ships with a spending card. Yield on your dollars? Swipe to buy coffee. The wallet you've had open in a tab for 5 years is now a checking account. Reserves are held 1-to-1 by Bridge, which is Stripe's stablecoin arm, and the yield routes through Aave and Morpho. So your high-yield savings account is actually DeFi wearing a tie, and honestly good. UK users are blocked from this one. Sorry mates, the FCA wants a word. About that, the UK just outflanked the EU on crypto. The FCA dropped its final crypto rulebook today and cut the stablecoin capital buffer in half, down to 1%. That directly undercuts the EU's MiCA rules, and Brussels is going to be furious. Applications open in September and the regime goes fully live October 2027. So the UK is basically saying, come build your stablecoin here, we'll charge you half the capital the EU does. That's not regulation, that's a sales pitch with a wig on. An $800 billion Wall Street giant just went on chain. New York Life Investment Management, yes, that New York Life, the one your grandparents had a policy with, debuted its first tokenized bond fund on Centrifuge. Ticker is HYB, settled in USDC. This is the boring institutional money, pension fund grade, white shoe Wall Street, and they're issuing on a public blockchain. Tokenization isn't coming, it's here, and it's wearing a suit older than most of crypto. Sorry, no US investors, this one's offshore only. Nasdaq just plugged itself into DeFi, their proprietary total view depth of book data. The stuff Wall Street traders pay 6 figures a year for is going on chain through Pyth network. That's real exchange data, free-flowing into smart contracts. Euronext, Tradeweb, Kalshi, and the US Department of Commerce already publish on Pyth, and now Nasdaq joins the party. Every Oracle problem tweet from 2019 aged like milk. The data layer just got serious. The SEC finally wants to talk about crypto ETFs. They opened a 60-day comment window on regulating novel ETFs, basically all the weird stuff like hyperliquid staking ETPs and BlackRock's Bitcoin Premium Income Fund. ETFs went from $4 trillion in 2019 to over $12 trillion at the end of last year, and Wall Street keeps inventing new flavors. The SEC clearly doesn't want to keep getting embarrassed in court, so they're asking the industry, okay, what should the rules actually be? About time, honestly. He turned $11 million of Netflix money into a Dogecoin bag and is now going to prison. Carl Eric Rinsch, director of 47 Ronin, got 30 months for defrauding Netflix out of $11 million meant for a sci-fi series. He lost almost $6 million on options first, panic dumped $4 million into Dogecoin, and cashed out at 27. Then he spent it on 5 Rolls-Royces, a Ferrari, and a Vacheron watch worth $388,000. Look, the Doge trade actually worked. That's the wild part. But I committed fraud and made it work is still fraud, and now he owes Netflix the original $11 million back. Best of luck. Crypto just bought a $189 million election. According to Public Citizen, the industry has dropped that much on the 2026 cycle already, about 37% of all corporate political spending. We already passed the full 2024 total of $170 million. Fairshake, the Coinbase and Ripple-backed PAC, is sitting on over $82 million. The MAGA Inc. PAC, backed by Crypto.com, is at $56 million. Whatever you think of crypto politics, the industry clearly figured out the cheat code: show up with checks. Old finance has been doing this for 100 years. We just learned it in 5. Last reminder, Compete Token is the sponsor today. Real games, real crypto. Link in the description. That's the news. Like, subscribe, and I'll catch you tomorrow.